Hey everyone, I'm Vasco Patricio and welcome to this 3-in-1 Fraud Prevention, Dispute Resolution, and Pci-Dss Masterclass. This course is actually a 12-hour masterclass made up of 3 courses of 4 hours each, one on fraud prevention, one on payment dispute resolution, and one on protecting your credit card data by complying with the Pci-Dss. It's a full package for any payment professional. So in terms of modules, this masterclass is made up of 3 major courses, and each course has its own modules. So let me just cover each one of the courses in a very brief overview. So course number 1 is Introduction to Fraud Prevention, payment fraud in specific, and it has 3 major modules in itself. The first module is about fraud approaches, that is, who does fraud, why do they do it, what are the approaches, is it physical, is it not present, and so on. It's about who does fraud and why. The second module within fraud prevention are the actual fraud techniques. We get a little bit technical. What are velocity checks, what is fraud scoring, address verification, and other techniques that you can really use to monitor fraud and even to prevent it. Our third and final module within fraud prevention is a full fraud strategy. How to assemble it, how to pick the techniques, and how to deal with the data so that you really have a fully functioning fraud prevention solution. Our second course is Introduction to Dispute Resolution, that is, how to deal with payment disputes, and this second course has 4 modules within it. The first module is about ADR, or Alternative Dispute Resolution, how to negotiate, mediate, and arbitrate, and what are the consequences of each one of these approaches to resolve disputes. The second module within dispute resolution is ODR, or Online Dispute Resolution, which is solving disputes through the internet, pretty much. How it's done, what are the usual principles, and what are some things to take into account. Our third module within dispute resolution is how to do dispute resolution for your merchant clients if you are a bank. That is, if you are a bank representing a merchant and you have to deal with the other bank, what is the process, what are the usual steps, and under what circumstances do the banking authorities actually become involved. Our fourth and final module within dispute resolution is a list of the usual reason code categories in chargebacks. That is, a chargeback is a request to make good on a loss in a transaction, but usually there is a reason code associated. It may be due to fraud, it may be due to a processing error, or any other type of problem with the transaction. So we cover the major categories of reason codes and what to do in each case, whether you're a merchant or a bank. Then, our third and final course of this masterclass is Fundamentals of Pci-Dss, and it is how do you comply with the Pci-Dss or payment card industry data security standards to properly protect your credit card data. So what happens is, we will have 2 different modules within that course. The first module within Fundamentals of Pci-Dss is about the essentials. That is, what are the Pci-Dss historically, what are the requirements as of version 3.2.1, what is the assessment process like, and what are the categories of merchants and the categories of the assessment that you may be slotted into depending on how you use credit card data. It's about the essentials of the Pci-Dss. The second module, which will be the bulk of the Pci-Dss course, is all about the 12 requirements, again, as of version 3.2.1. So we go very deep on every single one of the requirements. What are their sub-requirements? What should you do in order to comply? What are some traps that you may fall into? And at the end of the day, how to really make sure that you have a robust compliance strategy. And these are the 3 courses that make up this masterclass. So 4 hours of fraud prevention, 4 hours of dispute resolution, and 4 hours of complying with the Pci-Dss. So you may ask, who is this course for? And while it's going to be very useful if you are any payment professional, because you are going to learn how to deal with payment fraud, with payment disputes, and how to comply with these very strict standards in terms of protecting cardholder data. But I would even argue that it can be useful for many other professionals. For example, any cybersecurity professional that wants to learn how the Pci-Dss in specific protect data, or any payment professional that may not deal with fraud but who is curious about how payment fraud actually works. So it's a course with a lot of content, and there's a lot here for you to unpack. The course slides are included as PDFs, both individual PDFs for every lesson, but also a full package with all course slides on the first lesson and last lesson of every course, because some people just want to download everything and read everything all at once. And you will also have quizzes on every single lesson to really consolidate the knowledge that you've acquired throughout that lesson. I would suggest that you take the free preview videos and take a look at some of them. just to gauge whether you like the style of the course, whether it's for you. And if it is for you, remember that you always have a 30-day money-back guarantee. If this does sound like the course for you, it would be a pleasure to have you as a student. And see you on the inside in a minute, I guess. Thank you so much for watching. Let's cover some fundamentals of fraud. That is, before we dive into deeper topics, it's especially important to define what are the basics. What is payment fraud? How does it occur? Who is the victim? And more. Payment fraud is a global problem, and it's only expected to become worse as time goes by. Global losses from payment fraud have tripled from around 10 billion in 2011 to around 32 billion in 2020. So they have more than tripled, and they are expected to grow 25% more to around 40 billion in 2027. Payment fraud is a risk for multiple stakeholders. It's a risk for online merchants as well as their banks, the merchant banks or acquiring banks. This is because the merchants lose money from fraud, and so do their banks in the chargeback process. Consumers in transactions also lose, especially if they're a victim of fraud themselves, as well as the banks that issue their cards, the issuing banks. Fraud risk is a type of risk that is very different from others. Let me elaborate. There are usually three major risks in a banking institution. The first is attrition risk. This is the risk of losing clients, especially in competitive environments with a lot of other banks. The second is credit risk. It's the risk of a client of the bank just not paying on time. And the third is fraud risk. This is the risk of fraud occurring on their clients' accounts. So while both attrition and credit risk can be managed and estimated, and it can be considered the cost of doing business, fraud risk is different. It requires close monitoring, it can't be properly estimated, and it constantly changes. It's also important to clarify the differences between fraud and disputes. Fraud is actually a type of dispute, or to be more correct, fraud causes one type of dispute between a merchant and a consumer. There may be other disputes besides fraud, but fraud causes one of them. Disputes usually originate from four major problem types. The first is fraud, as we just mentioned. Someone impersonated a customer or stole their information. The second type are authorization issues. The consumer did not allow the merchant to charge this value, or the authorization is not clear. The third type of disputes are processing errors. The merchant provided the wrong information, or used the wrong API, or let the transaction expire, or other processing problems. And the last type of disputes are consumer disputes. The consumer claims that the product is faulty, or fake, or was not delivered, or others. A dispute usually occurs when a consumer requests a chargeback of the transaction value, and usually the reason code provided by the card issuer, like Visa or MasterCard, reflects that specific dispute type. The reason code is a database field that, when communicated, will state very explicitly the reason for the chargeback. So for example, if it's a fraud code, it will state whether it's a liability shift issue, a flagged merchant, or another reason. What are some examples of fraud trends and contexts nowadays? The first is identity theft, one of the most pervasive types of fraud. The perpetrator takes control of all information necessary to impersonate a person. It's hard to detect if done with enough skill. Then, the distinction between automatic and manual. Some fraud cases are handled automatically and some are handled manually. For example, if your credit card number is blacklisted or hotlisted, which is a synonym in the fraud world, then the transaction is automatically rejected. In other cases that may be more complex, then a manual review is necessary. Then we have chargebacks. Chargeback is the term used to describe a request for the money to be returned to a consumer. It has costs for both banks and merchants, and it should be avoided. It's important to realize that a chargeback doesn't just return the value of the transaction to the consumer, but it actually has associated fees for the bank and for the merchant. So even fraud cases that are solved don't have a zero result. They can still result in losses. What are our key takeaways here? The first is that fraud is a problem for everyone. It's a risk for both merchants and consumers, and to the banks of both. Fraud risk is hard to predict, and every chargeback has an additional cost. There are different types of risks, especially for banks, but unlike attrition risk or credit risk, fraud risk is not easy to measure at all, and it requires constant attention and vigilance due to its fluid nature. Finally, disputes and fraud are not synonyms. There are multiple reasons for dispute, and fraud is one of those reasons. Not all disputes are due to fraud, but every detected fraud case always causes a dispute. So as we see, fraud is a big problem. It's a type of risk that, unlike other types of risk, cannot be predicted, and it can be a big problem for both merchants and consumers and their respective banks.